Banking Law Notes by MG Law. Today we will discuss social control on banks, page number 38. Social control on banks. This means how to put additional control on banks so they start giving loans and advances to socially weaker sections and a priority sector. So first let's see the meaning. It means social control on banks means additional control on banks. So why additional control was put on banks? For restricting alleged mismanagement. There were allegations that there was mismanagement in banks and they were providing indiscriminate advances to large and medium scale business houses. So there were two main causes. One was alleged mismanagement in the banks, and they were providing indiscriminate advances to large and medium scale business houses. So to restrict them, there was put additional control on banks. That was social control on banks. What was the objective of social control? It was to have structural changes in the management of the banks. Okay, so this structural change in management of bank will delink the nexus between business houses and big commercial banks. The big commercial banks and big business houses were having nexus, and due to this nexus they were provided indiscriminate advances, and priority sector and weaker sections were ignored. What was the need of social control? The need was to help priority sector which was ignored. The priority sector includes agriculture, small scale industries and exports. So how social control was extended? It was extended by amending Banking Regulations Act in 1968. But despite social control, weaker sections were neglected. They were not provided finance. Okay, despite putting social control on banks, the weaker sections were not provided the finance. Okay, the restrictions were flouted. Okay, the restrictions were not followed. Okay, they were observed only in form, only in paper. This failed in achieving the desired goal. Okay, so what the government did? The government did nationalization. How it happened? The government of India set up NCC, National Credit Council. NCC placed its report to Government of India, and on the basis of this report, the government passed Banking Companies Acquisition and Transfer of Undertaking Act in 1970. What was the result of this act? The result was that major Indian banks were nationalized. It was an important event in free India. After this, the NCC, which is National Credit Council, it was dissolved. Were the measures of social control and nationalization successful? The goal of both the measures, social control and nationalization, was to channelize credit to priority fields like agriculture, small scale industries and exports, and to promote rural banking. In Bank Officers Confederation versus Union of India and others, the court had said that the object of nationalization is to render the largest good to the largest number of people, to have maximum benefit of maximum number of people. But over years, most of eminent persons have felt that both the measures of social control and nationalization have not been favorably put in practice to achieve desired goal, that they have not been favorably implemented, not have been implemented in the best way. Okay, so this is social control on banks. Let's have a quick summary. Social control on banks, it means additional control on banks to help the priority sector and weaker section. That means to help the socially weaker sections. Okay, what's the meaning? It means additional control on banks for restricting alleged mismanagement in the banks and the indiscriminate advance to the large and medium scale business houses. What was the object? Object was to have structural changes in the management by delinking nexus between big business houses and big commercial banks. What was the need? The need was to help priority sector which was ignored. The priority sector includes agriculture, small scale industries and exports. How it was extended? It was extended by amending the Banking Regulations Act in 1968 for social control. But despite social control, Weaker sections were neglected, they were not provided the finance, restrictions were flouted, they were observed only in the form or in paper. This failed in achieving the desired goal. Then nationalization happened. How it happened? Government of India set up NCC, National Credit Council. NCC placed its report to Government of India, and on the basis of this report, Banking Companies Acquisition and Transfer of Undertaking Act 1970 was passed. The result was that major Indian banks were nationalized. It was an important event in free India. After this, NCC was dissolved. Were the two measures of social control and nationalization successful? Their goal was to channelize credit to priority fields like agriculture, small scale, and exports, and to promote rural banking. In the Bank Officers Confederation versus Union of India and others, in that case also the court has said that the object of nationalization is to render the largest good to the largest number of people. But over years, most of eminent persons have felt that both the measures of social control and nationalization have not been favorably put in practice, have not been favorably implemented to achieve the desired goal. So social control on banks is completed now. If you are interested in all these banking note PDF, so you can get it from the description box, or the link can also be provided in comment box. Next topic will be Banking Regulation Act or Company Banking Companies Act, which we will cover in next video.